Good morning, traders. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, and joining me today is Chuck Self. He is part of iSectors, post-MPT ETF, a Nasdaq-listed ETF. Chuck, I want to thank you for joining me at MarketSite today. Tell us a little bit more about MPT, sort of the methodology and investment style behind it.
Well, iSectors post-MPT ETF was actually started as a separately managed account 12 years ago, and we just recently got listed on Nasdaq last year as an ETF. Vern Sumnick, our CEO, after the 2000-2002 market correction, decided that there's just too many factors for the human mind to understand what is needed in order to allocate to different sectors in a efficient way. So he came up with a quantitative process that is forward-looking to do that, and thus all of our human intervention comes in creating the model and maintaining it, whereas we apply the results of the models objectively to our clients' portfolios, including the ETF.
Right, so how do you rebalance a portfolio such as this with the investment environment changing?
Well, monthly we update all the factors that go into the models. There's over a dozen factors that goes into the post-MPT models. And with the update, the model creates new asset allocations that reflect the current environment. And again, because human beings are not very good at being able to process all of this, right, we let the sophisticated statistical model do that work. We also have 21st century computational processes, so it does it in the most efficient way possible.
Well, broadly speaking, what are the models suggesting now? Because we have really been in an 8-year bull run. Is it slanting away from equities or more exposure to equities at this point? Broadly speaking, what does the model show?
Well, it's fully invested in equities right now. This is the best of all worlds for equities in that we have growth, but not strong enough in which we're worrying about inflation and worrying about the Fed increasing interest rates significantly. So we expect that economic growth is going to continue, but at the under 2% level, probably a little less than what people expect. Right. And inflation is going to also stay relatively low, and because of that, the Fed is not likely to raise interest rates this year again, and thus it's a great environment to be in equities, given the at least modestly strong earnings increases we're going to see for the second quarter and then for the rest of the year.
Right, yeah, so I wanted to ask you, even though it's a quantitative model, sort of what your outlook is for Q2 earnings and for the back half of 2017.
Yeah, we don't predict earnings per se, but we do agree with the consensus that earnings will continue to be strong. We think there are certain sectors that are ahead of themselves and certain ones that will be surprises, but we think that the market could continue to like the earnings pattern that we're seeing currently and into 2018.
Okay, well thank you very much, Chuck, for joining me at MarketSite. And traders, as always, thank you for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.